Heidi ho, everyone, and welcome aboard. Have a happy week ahead, I hope. And it's great that you could be our trading buddies for today. I am on a very slow connection and remote in the top of Tasmania at the moment. So I'm hoping that the connection is good enough for you to A, hear me, and B, not necessarily see me, but to see the charts when they come up. If that is not the case, I'm sure somebody will let me know. All good. Excellent. Thank you, Sam. Righto, Sam's looking after us today. I seem to have a whiteboard here to share rather than a screen. That's particularly ordinary. I'm on a laptop today instead of having five monitors in front of me. I've got one. So you will forgive me if I'm driving this not too well. We shall see. All right, first up, we have a few minutes to go before the current candle closes. If you haven't been subjected to, I'll put it that way, this for trading. This is a test system. The Asia session, of course, is, let's get rid of one of these control panels. There we go. The Asia session, of course, is bounded by Hong Kong Open and the last candle prior to London Open. Well, that's how I'm gauging it anyway. So that's the range that we're trying to break. We have identified the top of the range here at 1.1281, or we've identified the bottom of the range here at 1.1085. Sorry, I've got to keep moving my control panel so I can actually see the chart. Such is my situation today with only one monitor. So 1.1085, 1.1281. The idea, of course, is to try and trade the range to begin with, and then hopefully the breakout of the range. So what we identify there is the top, the bottom, and the midway point. The midway point is at 1.1187. And what we hope to do is to use that as an entry, either a short or a long. Now, our trade will depend entirely on where the candle is. G'day, Lewis. How are you, buddy? Will it depend entirely on where this candle closes? Now, if it closes above the midpoint, we seek to trade short. And if it closes below the midpoint, we seek to trade long. Now, a few caveats around that. One, if we are trading in the direction of the current candle, we don't take the trade if we're going short, right? So in other words, right now, this candle looks as though it's going short, or it's a bearish candle, let's put it that way, and we are above the midpoint, but only barely above the midpoint, and we do not want to enter short on this bar. Second, if we're within, a very short distance to that midway point, we also do not want to take the trade. So if we close anywhere around this, we do not want to trade. So it's looking very much like we won't be placing a trade here today. If we were up here, we could certainly trade short, or if we were down here, we could certainly trade long. But bang on the entry point is not a great idea. So at this stage, we'll just call that a no-go. Who knows? In the next minute or so, it may move. Lewis has been in Bali, now back seeing the charts. Excellent. Bali, eh? Oh, you're a bit early, Lewis. Isn't Bali in a month or so? Or are you going back? I don't know if you're going back or not. Maybe you're moving to Bali. It's too hot for me, mate. It really is too hot. But lovely place, lovely people. Don't get me wrong. Advanced party, good. Okay. Okay, so we are very much in the no-go zone here. We're bang on where the entry would be, and for that reason, we won't be taking this position. I'll just wait till the candle closes. Who knows, in the next 10 seconds, it might shoot up or down. I ain't thinking that's going to be the case, however. Tick, 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 tick. Okay, we just snuck below it. But still no trade. We're too close to that midpoint. Yeah, look, big moves on the pound and the euro late in the week last week. And Not sure if that's sustainable, to be honest. We'll have it. Okay, we're bang on entry, and therefore there'll be no trade here. We'll just let that one go and see how the rest of the week progresses. But they're the rules. If you haven't been subjected to this before, then that's exactly what we're looking for. Now, I would suggest that in probably 2 or 3 months' time, if this continues to be a winning proposition, and we'll add a few go, then we will adopt this as a trading system. But until that time, it's very much a case of do not trade this with any meaningful money. Micro lots, maximum, absolutely. Righto, that's all I have. Oh, no, it's not. If you are looking to trade this, what we do is if we do get an entry, if we take an entry, then our stop loss, if we're going short, our stop loss is the high of the range. Our first take profit, which is a bit of a misnomer because I'm not taking any that of the range. What I would do at that point, we hit the bottom of the range and we are going short, I would move my stops to entry. The target will be 2.5 times the risk. So if today was an example and we were going to take a trade and we were going to trade short, our risk is pretty much 100 pips, just short of 100 pips, but let's say it's 100. And our target would be 250 pips, which is down there. So 2.5 times risk is what we're using for that. Why? Because when Ash and I did a lot of, I suppose you call it back testing of where pound and the US dollar is in terms of a breakout, the sweet spot turned out to be 2.5 to 1. And that's why we're using that particular ratio. Dollar and pound on par. Wow, what a question, Lewis. Let's have a quick look at the pound and the euro pairs and what happened last week. I suppose on balance, you would have to say that it was due. There needed to be some relief, but Euro Aussie smashed it. I better look at the weekly charts. Actually, they're the dailies. No, I'll stick with the dailies because the dailies are telling you when it happened. So Wednesday, Thursday, Friday, end of the week, smashed it. Euro Swissy, end of the week, smashed it. Euro Pound came off. So therefore you can deduce that the pound was stronger than the euro. And we'll get to that in just a Euro Yen smashed it. Euro smashed it. Euro dollar smashed it to a point. Friday was a bit of a nothing happening. Look at the pound. So Thursday, Friday. Pound CAD, same all week. Pound Swissy, same all week. Pound Yen, same all week. Pound Kiwi, same all week. And pound US dollar, same all week. Is that going to continue? Look, my for long this week. It may have a little bit of, I don't know, momentum going into today. It may, but after those big moves last week, I would certainly be anticipating at the least, actually pull back at the most. So do I want to trade that? Don't think so. I don't trust the strength in those moves, but I certainly don't want to trade against those very, very big moves either. We have a new host, do we? Am I not the host? I don't know. New host of what? What are you talking about, Lewis? What are you talking about? What are you talking about, Lewis? Forgive me, most of you are probably not old enough to know what that actually means. That goes back to, my goodness, probably the 1980s. From the chat box. Oh, yeah, Sam. Sam's the boss today. Absolutely. Haven't you met Sam Lewis? Sam, are you going to Bali? I don't know if she is. She'll tell me. What's it talking about? Good Times? I think it was called Good Times. Something like that, anyway. No, not Good Times. If anybody knows what the name of that show was that had Gary, can't even remember the names. Little guy, Afro-American. No, won't come to me. Somebody will know. Somebody will know. Maybe not in this room, though. We shall see. Righto, that's not trading anyway. Let's talk about trading. So I've dealt with the pound and the euro, and I think they're pretty much off my radar, all of those pairs for the first 2 days of the week anyway, just to see what happens. And that leaves us, of course, with a very narrow field in terms of what we would be looking to trade, or what I would be looking to trade today. And the field really narrowed down to two when I actually did my analysis this morning. One of them was CAD yen. Now, CAD yen's right in my ballpark, and the reason for that is it is range. It's gone into range, and it's gone into an eminently decipherable and determinable range, which is, of course, what we like to see. Problem at the moment is it's rallying too hard, and here's what I want to see, and here's what I was looking at. Sorry, I've got control panels all over my screen here. I've just got to continuously move them. Okay, that's probably a bit tight for me to see with all those boxes open. Let me put that down there. So what I was looking at when I did my analysis was this here, last month's monthly pivot, of course. Bounce, 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 like Skippy the kangaroo. Every time it hit the monthly pivot, it just smashed it back here. You can see the range in the absolute flat daily pivot line there, and pretty much that's what it bounced back to, just above the daily pivot, bounce, above the daily pivot, bounce, above the daily pivot, bounce, above the daily pivot. Aha, we're above the daily pivot and the weekly pivot. And what I was really hoping for today was price hitting those two levels, which is pretty much the same level, then coming back and giving me a higher low off which I could trade. I wonder if that happened earlier in the day when I was, yes, it did. Didn't really happen to a great degree there, but that's absolutely 100% what I would have been looking for. Hit the pivots, come back, reject that level, give me a black candle. Oh, it doesn't get any better. It really doesn't get, well, it does. It gets better if it happens when London opens, and not back here when that's bang on Tokyo open, isn't it? Maybe 2 o'clock, 3 o'clock. So straight after Tokyo, absolutely textbook trade. Lewis, 100% right. What you're looking for. And if it happens on a 4-hour chart, I'll be doing exactly the same thing. So just to recap why I liked this, it was because it's in such a tight range. And if you go down to your smaller time frames, as I just did, and I'll get rid of a few of these chat boxes again so I can see. This is what I live for. This is Jeff Trading 101, as Lewis has said. When I see price go into a chart pattern or range in particular, and I consider ranges to be not only rectangles, but channels, triangles, all sorts of things. Anything that's continuously bouncing off a discernible level is exactly where I'm looking to trade. So this is, as I said, absolute classic. Up to the pivots, retest, black candle. Why black candle? Well, because the way I trade, I like candles that are pointing in the opposite direction to the way I want to trade. So if it's got a black body, I'm looking to trade it long. And that's exactly what the market gave me here. But way too early for me. I was driving between, where was I? Place called Marrawar on the west coast of Tasmania this morning. Marrawar and like 3 or 4 houses overlooking the roaring 40s, the western. for
Can you guys hear me, or is it? I don't know whose internet. I think it must be Jeff's internet. Can you guys hear me? Okay, you can hear me. Okay, all right. It's Jeff's internet. Is it Sam? Jeff's net. Cool. Okay. All right. Well, I will take the screen then. I can't continue on what Jeff was saying because I don't know exactly what it was, but let's have a look at what this week's data is suggesting, which is possibly different to what Jeff was saying. Hi, Lewis. You all right, buddy? Okay, so this week's data is, in fact, let's start with the FTSE. The FTSE 100 is, he's trying to get back in. Now I've taken a short, I've got a long on the FTSE here, but that hasn't worked out. So I've got my hedge on, and I've just taken another short on. I don't know whether this is definitely going to work out or not, but I will aim for this lower level down here if possible. There may well be, now these are squeeze levels. So if you look at the monthly, we're below the 50 period moving average on the monthly. We are below the 200 period on the weekly as well. There is a trend line that is running along here. Which we're also below. So we may well come back and try and test this trend line, if we're going to break down at all. I don't know if we're going to break down, but I have taken the short, and I was probably a little bit early. I was already in here. This is my hedge trade, and this is the selling trade here. So I am short on the FTSE. So there is a trade in the FTSE short. The issue is that we've got a couple of stocks, namely oil stocks, that are doing okay. So I'm not sure whether this is going to come down or not. But as you guys know, I tried to get in long on the NASDAQ on Thursday, and I've had to hedge that position as well. So it's looking at this stage that the market is probably still going to be drawn to be going lower. The oil situation is definitely helping elevate the FTSE for now without seeing any particular upside. Now, where I will be wrong on this, in my belief, is if we start to cross through probably, I'd say it's this trend line here, which we've not had a closing position there. If we look at this on the hourly, you can see there's lots of tails here. So until we get through that level, then I won't believe that we can go higher. Really, though, the areas here. Now that would take us through the daily pivot and the trend line. So that'll be, re-hedged from the short to a long, and then I'll be going long instead. So might not have that much room, but it looks like it could be a sticky period. So really, for my mind, I just need to see this thing collapse. And there's a chance. There's a lot of nervousness out there. I'm seeing the stocks that are doing okay are energy stocks, and there's one banking stock which is doing all right. So that's probably something to do with their specific profits. But we heard from Nike last week that there was a glut of inventories, and there's just stock they can't sell. Now, if there's a glut of inventories and stuff they can't sell, that would suggest that we might well start to see some of the CPI data start to dip. So it's possible that we could form a bottom relatively soon. We probably need to see that from a couple of other resale stocks as well. It would also suggest, because of the debt that the consumers are carrying, that there's going to be less demand. So less supply, less demand. The inflation picture could start to just ease off a little bit. Now, that would suggest also that we see the dollar start to weaken. And if that's the case, the FTSE will do okay, the NASDAQ will do okay, gold will do okay, and obviously some of the other currencies will do okay as well. So if we have a look at what's happening to the dollar index, we did see a start of a downward movement on the dollar index. Now, one company, as in Nike, is not enough to probably start a collapse to the downside for the dollar, but it could be a little suggestion that things are changing. We also heard from the Bank of England that are effectively doing QE on the long end of the curve, you know, while they're purchasing 30-year bonds, 30-year Treasury gilts. So is that maybe a suggestion that we see that right across the board? Could be. So another thing that could start to suggest that there is a pivot coming from these central banks. Might not be this month, but I would suspect going into November, when the Fed is at 4%, that might be where they start to freeze. So October is a bullish period for stocks. It needs to see something that is going to give it some sort of elevation. Maybe those reports from Nike could be the start of it. Maybe the report from the consumer could be the start of it. So we might start to see this market just turn around a little bit. So I'm keen not to commit too heavily to the downside, but at this stage, the market is still suggesting that there is still some potential weakness. So this short is in the market, and it will remain in the market unless we cross through this level. The other thing we should look at, of course, is oil, because it's oil which is managing to push these stocks higher. Big gap, which probably needs to be closed before we go anywhere. Oil will be another thing that does well if we start to see that dollar weakness, which again is going to push the FTSE higher. So there's a few things out there. There's a few things in the picture which could suggest that we are going to see a bit of a turnaround. Now, the currency pair that looks good this week is the Aussie CAD for a long. Now, so far, we've not managed to hold on to the daily pivot, but there is a trend line along here that needs to hold. And if that trend line can hold, that would suggest to me that that the Aussie CAD is a potential trade for the week.
What chart's that one, mate? And g'day, by the way.
This is the 15. I mean, if you look at it on the daily, it's quite interesting, because on the daily, actually, maybe it's not the daily, maybe it's the 4 hourly. Yeah, on the 4 hourly, what we've got is the potential for this to be an inverted head and shoulders. And we're on top of that right shoulder. I don't like that this is looking less even. You could definitely argue that this is also a head and shoulders. So, but there is an inverted head and shoulders here. If this does become a higher low, that's going to suggest that we do see some higher prices Aussie CAD. So the Aussie CAD did churn out the best result. The CAD COT data on the CAD was obliterated. But what's interesting is that while we're looking at the COT data, it is backward looking, really, because it's from Tuesday to Tuesday of last week. So it's not really giving us the forward indication, but the fundamentals don't work out. So I should say the fundamentals do work out for the Aussie. They're about flat for the CAD, but the seasonal data works out, again, better for the Aussie than it does the CAD. The environment might not be right. That's the big problem. All this stuff just might be completely out of whack because of the environment. You know, we know the Aussie does tend to be associated with growth. If we start to see some inflation data which suggests that we could be easing back a little bit, PCE didn't do the job the other day. But as I say, now we got Nike coming out, you know, now we got sort of a micro indication that there could be some inflation prints coming out that could be weaker. Could we start to see this market turn around a little bit? Could we start to see the Fed do the same as the Bank of England and buy some long-term treasuries, you know, so maybe some 30-year treasuries? Who knows? We don't know, but there could be some hints that the things are changing. The other thing that we need to look at is what was the other thing that I was thinking we needed to look at? There was something. Oh, the pound. Now, the reason we need to look at the pound is that Liz Truss over the weekend has done a U-turn. So what we saw was a run on the pound when the government gave their policy. Now the government have reversed that policy. Does that mean that the pound starts to get a bit of a rally? Well, if you like the situation and the scenario versus the dollar, then you would say yes. The fundamental data does not, COP fundamental seasonals does not point to a buy with the pound, because it won't take into account things like U-turns from a government. But it could mean that we could start to see this thing strengthen. What it does suggest, though, is that it is still a weak currency, but there might be some sentiment flipping just because of that one statement. So it could be a short-term move to the pound to the upside, and then we'd need to either see the data catch up, or the price catch up with some levels that would suggest to go short again. But we might see some upside with the pound this week, mate.
Yeah, look, I was commenting on that before you came in, and untradeable for me. And the two items you've just highlighted there kind of rubber stamp that for me. I said that the rally was interesting, and I had no idea why, but I now know why. But I felt that consolidation or retracement was probably the most likely outcome. And what happens from there, I don't know. Today it may continue that momentum, but I don't think it will see that through Tuesday or Wednesday. I think we'll just go into either a flat situation or we will get a little bit of a pullback. And as I say, if that then produces a higher low, maybe there is some upside. But I don't.
Yeah,
I don't know.
well, 5 days of upside from the pound after the extreme lows. Much better to compare it against the euro, in actual fact, which we will do.
Yeah, it did well.
Yeah, it's doing a lot better, isn't it? I mean, if you look at the weekly bar on the euro, it's pretty brutal.
Yep.
So it would suggest that
still above the SWE line.
Yeah, there's the SWE line there. Yeah, down to the SWE line. I think. Well, I mean, that would be a great area of confluence because of the price point as well. So I think pound down to something like 86.18 on the against the euro looks probable. It certainly looks probable right now. And now it's got a bit of a catalyst as well with the government U-turn. So could be a bit of a turning of the tide here, mate. As I say, the FTSE is currently, I am short on the FTSE, but I don't love it. I'll probably be sort of flipping positions on the FTSE relatively soon, and it's got to, as I say, break some levels here, and I'll be switching my allegiance to the upside. But it's got some work to do really before anything else. Big gap, unfortunately, between. Not too big actually. So could be a bit of a bullish few weeks, mate. But I think that the Nike release is the most interesting. The announcement of the glut of inventories that it's got. That can't be the only company. How many more companies are going to come out and say, look, we just haven't been able to sell anything. So whereas before we had a problem with supply, now we've got last year's supply still sitting in our warehouses. So they've got two choices. They destroy it, which would be a probable thing that they will do, because if they don't, how are they going to sell the new season stuff? Or they sell it at huge discounts, meaning that people will buy that stuff and not the new stuff. So difficult one for a company like Nike now. But yeah, inventory bulging for one company anyway. And as I say, credit is tight for the consumer, because now we're starting to see those interest rates go up. That means that credit card rates have gone up, and they probably won't be spending quite this where they are. So then we got potential oversupply, and a lack of demand. So could start to see this inflation data start to move, mate. And I think what's interesting is that it's probably nothing to do with the Fed.
Yeah, it's interesting what you just said. Could we possibly be going to an oversupply situation? That's been quite the reverse of that for 2 years now.
Yeah,
quite the reverse of that. That is interesting. So that could well and truly turn things around. Yeah. Okay. I think Lewis, with the pound versus the dollar longer term, I think it's more the dollar than it will be the pound. I think the pound's still got an inherent weakness surrounding it, but the dollar, to my mind, has got probably a little way to go. Have you got your dollar index chart there, Ash? I'm sorry, I'm on limited resources here because I've got a small laptop. And
not a problem, mate.
You've got control panels open. I can't even see charts. If you go to the monthly on the dollar and go as wide as you can, you'll see the level that, to my mind, it just can't skip through. This is the level we spoke about a couple of weeks ago, and it's struggling. It's struggling its butt off to get through that level. Yeah, that one. But if it did, it brings those highs in, of course, and that's going to be, I'll say, an issue for the pound because I'm bearish the pound. The issue becomes the pound rallies when the dollar comes off that level. Can it rally right now? I don't think so, medium term to long term, because I think the dollar will go through that level eventually. It'll retrace off it maybe, but I think it'll challenge those highs. But as you've just said, Ash, if supply outstrips demand, then all things could change very, very quickly.
Yeah.
Interesting.
Yeah.
Very interesting. I've got a soft spot for silver this week. But is George in? We better get to George.
George is in. George is in.
George is in, but he's not talking to us because we've held him up again. George, where are you, mate?
Admit. He might, maybe needs power. Let me just see.
Sam's on it.
Sam's on it. Great.
How was your weekend, mate? Anyway,
it was okay, mate. You know what? It's getting sort of the weather's changed over here, and all the colds and everything are coming in. So we've had a weekend of having colds. So it's not been great for that, but
not awesome.
You know, a great weekend, I have to say. But it was a really, really nice weekend. Very, very relaxed. But yeah, hence why I'm in this kind of sheepskin thing. I'm getting colds now.
Yeah, I've been on a business/leisure trip up the top of the state this weekend and had wonderful weather. It's been gorgeous.
Oh, you're lucky.
I was over on the west coast where the roaring 40s just pummel that area, but it was as calm as a mill pond. It was absolutely gorgeous. Beautiful part of the world, but not very well inhabited because everyone gets blown off their feet with the roaring 40s.
Well, we have George with us, mate.
Good on a good day. Hello, buddy.
How are you guys doing?
Yeah, good. Thanks, mate. How are you?
I'm doing well, thanks. Doing well. You know, sorry for logging in late.
That's okay. You're getting used to us getting to you half hour late, so I get it.
Yeah. What's your opinion, George? Where are you? I mean, you heard the sort of discussion about the dollar, I presume, and about Nike. Which they are interesting. I mean, I think it was an interesting report from Nike. Really, really interesting. You know, sort of for a company to come out and say that in the midst of what we've got going on, it does suggest that we could start to see some reversal in CPI. And as I said to Jeff, you know, nothing to do with the Fed. You know, this isn't to do with money management, but by any stretch, and the way they're controlling money. Well, to a degree, I suppose. Maybe the consumer aspect of it is. But not the supply side.
You know, it's. I'll never pass the exam on fundamentals.
Yeah.
I'll probably say that a number of times, because whenever I hear something dramatic like that, I always want to go back to the charts and say, well, can I see that either already playing out, or can I see that likely to play out? That's I think that's a price action trader's cop out, right?
Yeah.
I've got to see it on the chart. So if I have a look at these 6 charts that I have here, and I posted a video on TTR, and it was only on S&P 500. Maybe let me have a look at that. It was only on the S&P 500, and I was saying the higher probability event is not good news. You know, if we have a look, I want to just squeeze a little bit more. Okay, let's have a look at that. I mean, when we're here and we had this huge tumble all the way to the COVID low, then we came back before all of this had taken place, all of this stuff, just looking at the measured move, that would say to you, hang on, if the bulls are strong, we're going to get there. And we got there. As incredible as everyone thought. And all of this was just the market trying to get to that measured move. And then we failed to get above it. Now, the reverse side of that, which is the not so good news, is that, you know, we are at this key level, which is key in many respects. I mean, there is this potential double bottom here. But if you look back here, after we broke above that high, which was all-time high at that point, we went sideways, did a double bottom, double top. So that's a key level. We're back there. And it's not improbable to think that we're going to break beneath this. We might do same thing we did here, might still okay here, double top, double bottom. And if the bears fail, if the bulls fail to defend their double bottom, I mean, we're going to have to go down here to 376. That's how long it will take. Probably not too long. I mean, this was less than 18 months to get here. What it would need for us not to get in this area here, for the rest of the year, the bulls have to create the double bottom. You know, they really, whichever way, they have to create, firm up this double bottom. So we have to go up here and come back and do whatever. And then there's a chance that we just get back, going up then into a trading range, right? To try and get to those all-time highs. But if the bears maintain their momentum and they break beneath here, and if we get into this zone, that's going to be the area, that's the same as we had 18 months ago. And then the next thing is just to tumble all the way down. So higher probability event for me is that we're going to get down here, you know, in the rest of the year. And if we do get down here, I mean, if this month ends up somewhere down here, closing beneath this, then you can really expect that we're just going to tumble further all the way down. Now, that may not correspond exactly with the good news that's been sent out.
Well, you know what? It's interesting, actually, mate, because it's not particularly good news. It's just more that if the move that we've seen is mostly about dollar strength, which I think it is, you know, this is what we've got going on is the dollar strength completely choking the global economy. You know, we had issues before. We had sort of, you know, the problems in Ukraine. We've got supply issues and you know, a catalogue of other things. But now the dollar has got so strong that it is now choking global the global economy right the way across the board, because it is the reserve currency. So everybody has to interact with the dollar. So everything has to be in somewhere along the line, along the chain, will touch the dollar. Now, if the dollar's strength, as much as anything else, and it's difficult to know exactly why the dollar's strengthening. As I said yesterday on the TTR, to think that the dollar's strengthening because the Fed is raising interest rates is it seems to be a bit of a misnomer, because it can't be about the spread, because everybody else is also raising interest rates. You know, the New Zealand, the Reserve Bank of New Zealand went way earlier than everybody else, and yet you look at it against the dollar and it's been spanked. So there's something else at play. But if we sort of take it on face value, then we sort of and we assume that inflation going higher will mean that the Fed will continue to put their foot on the accelerator, and the dollar will continue to strengthen. That would suggest that any sort of inflation indication will be, that's going to reverse may well then start to boost the market. But it's not particularly bullish, you know, for Nike to basically be saying we've got so much stock that we can't sell it is not good for a company. You know, they've effectively, you know, their margins are being affected by that. So it's a very negative bullish, if you like, it's a very negative bullish indication. So it may not play out that way, but it could certainly ease the dollar back. And I suppose that's the thing. We've got this little micro
stock though. Is it because they can't get it around the world?
Sorry, mate. Can you say that again? You were breaking up a bit. Oh, we've lost Jeff again.
I think it says something like, "Is a stock because they can't move they can't get it out into the world or something, or they can't move it around the world." Something to that effect.
Okay, yeah, I'm getting an unstable. I'll probably crash out again in a minute.
No worries, mate. We got that. Is it because they can't get it? Have they got a glut of stock because they can't get it out around the world? I think what probably happened was that they had all these orders,
That's right.
backlog. Yeah, they had the backlog of orders, and all of a sudden the orders got delivered, but it's kind of out of season, so this late. I think that most of the stuff arrived so late that they were sort of like producing and providing kind of new products that meant that the old stuff was just going to sit there, because they can't just go, you're halfway through making our tracksuits and trainers, cancel them because we don't need them anymore. They probably have to, be good to the suppliers, and the suppliers will just sort of like put the stuff out.
But I guess it's a bit like having a beer, isn't it? It's always 5 o'clock somewhere, so there's always winter somewhere.
Exactly.
Yeah.
So they probably sort of ordered the stuff when they thought things were growing. All of a sudden, things start to shrink a little bit, but they've got these orders in. Now they've got this inventory glut. And as I say, they won't be the only company. This is Nike. So we're talking about a big company that are suggesting they've got this imbalance of inventories. But again, back to the consumer is also affected. So I think it's interesting how this will play out. We need to see this in the data. We need to see it in PCE. We need to see it in core PMIs, core CPIs and PPIs and also the PMIs. But if it does start to look that way, I think we could actually see a bit of a run on the dollar for a bit.
Yeah, that high could be in play, I think.
Yeah. So, I mean, it's going to be interesting, I think, across all the markets we look at them, but it's probably not necessary. What's going to take place in this particular month? We are at key levels of support. I mean, this is just the UK 100, so that's our low of 2022 presently.
Yeah.
That's likely to get tested. And it's a huge magnet. That's the bears want to test that and see if they can break through it. But if you look, I think we spoke about this before, this is where the bulls showed strength. So while the bears want to break through that, the bulls are going to defend this so that we have a nice and clear double bottom, and just see how far we can rocket up with that. Hang Seng 50. Now, Hang Seng 50, if you just have a look here, February, I mean, look at this cataclysmic sell-off that we had in February. It's not unlikely that we can have the same. Okay, but I think the first magnet where the market wants to go is here. This low leg 1, leg 2. So we had this first leg here of this breakout with the pullback, and that's where I think the bears will be completely satisfied. These bears here. So if you're a strong bear, in other words, you can just hold your stop up here and build your positions as the market carries on. You are seeing this. You're saying that's where I want to get to. That's the level that I want to at least get to take my profit. So there's likely to be a bit more selling off on Hang Seng 50. Then, of course, I mean, the next level would be here, which is this breakout beneath this double bottom here, this bear breakout. The measured move is here. So there's a couple of strong magnets. And I think there's a little bit more selling to go for Hang Seng 50. So again, when I go into the market each day, I'll trade what's presented to me. At the back of my mind, I know the bears are strong. So if I see bear setups, bear reversals, jump in more eagerly than I would. Did I go off? Can you hear me?
No, you're fine, mate. You're absolutely fine. Do you know what? While you're saying that, I'm in complete agreement with you, because even though I'm looking for indications for a long, I've taken a short on the FTSE this morning, because you're absolutely right. The charts do not at this stage say go long. They still say go short. So we've got to sort of like allow it to play out, and allow ourselves to be wrong. We're going to be wrong. If we keep going short, we're going to be wrong at some point. But that's okay. You sort of like you stick with the trend, and I was wrong last week. I tried to go long with the Nasdaq, and you don't get spanked because you make sure that you've got your protection in play. But my protection was hit, and this morning I've decided not to try the long again. I've just sort of thought, well, market still says go short, so let's continue with that, and we'll be wrong on the downside eventually. But you're absolutely right, and I totally agree with you. We don't appear anyway to be at the stage yet where we can start flipping positions.
Yeah. So I mean that story just carries along. Level of support, German 30 low of 2022. Euro versus dollar is just interesting. I mean, we are in this bear channel here that's just prolonged for the year. And when you see the huge couple of candles we had there, if you keep the channel in mind, you just say, well, okay, that's fine, that's expected. We have to go and test the high of the channel, right? So that's not a surprise, you know, for the bulls to break out of this prolonged channel and come back and test and accelerate up. It's going to take quite a bit to do that. So if you were to consider it, strong bear breakout here, and just at the end of the previous month. So I'm not surprised if we get a kind of double top in here on a sell-off, or if we go up and test that, which just takes a day or two, we're still in the bear channel. So we're still selling off on the euro. And gold, again, this level here, which is 2022 low. Let's just do this. So that level, I mean, it's going back to test 2020 levels. So I think gold is also positioning itself. You know, the bulls want to take over the market. They broke out beneath, the bears were trying to create this channel, obviously broke out beneath it. But the problem for the bulls, I mean, this low has just been created, although it goes back a couple of years. The problem for the bulls is getting above this trend line, and they seem to have be failing already.
Yeah.
Let's see what this week brings. I mean, but as far as gold is concerned, in this week, unless we start to get some strong trend candles, I'm not willing to jump in at the back of dodgy candles. You know, just become very difficult unnecessarily. But what if we get up here and I see a failed breakout above the channel, or failed breakout above that level, nice decent enough bear reversal, then in the day I'm just going to look for shorts. If we come down here and get a double bottom, then we look for longs. These dodges just stay a little bit away from the precious metal until we get a little bit more information. So that's kind of the start of the month, start of the week for me, Jet.
Yeah, no, that's really good, mate. That's really good. I mean, I think they're all really interesting markets, and I think that the normal order here is that we would see some buying in October, but we're at the low. I mean, it's if you were to look at this market on a regular kind of, with regular information, without knowing what we know that's been going on, and somebody said to you that we are at lows that we've not seen for a couple of years, and we are in October, which is seasonally the most bullish period for stocks. Are you a buyer? I think most people would say, yeah, you know what, I'll take a punt. I'll go out and get some stuff. It looks pretty cheap. It looks like we could get a run to the upside, and that's always at the back of the mind. But we are in a situation where the potential that this time the central banks really have broken things. You know, well, I mean, we've been talking about it for years, Jeff, about them potentially breaking things and damaging things almost irreversibly. I don't know, even with QE, whether it's going to fix it. You know, I think that the fact that you had COVID and you had Russia on top of the kind of the roaring policy that they were employing for such a long time to get things going.
And you've got to take on board that, you know, we're in a raging bull market for 12 years.
Yeah.
Or whatever it was, you know. So, you know, there's only one thing can happen after that, and that is a correction has to take place.
Yeah.
And we've gone into a bear trend. It's pretty much stock standard at the end of the day, really, isn't it? We're not seeing absolutely anything that should surprise us.
Once every 15 years, if you look over the last 100 years, once every 2 years, there's a 10% correction. once every 15, there's a 25% bear market, and that's where we are. So you're absolutely right. You know, we're in that 25% bear market, which could take until next year before it starts to flip.
Or because of the circumstances that the central banks have created, and as all of the ingredients that go with that, it could last longer. So I would not be the least bit surprised to see this time next year we're still going down.
Yeah.
It'll be slower. It'll be slower, but it wouldn't surprise me at all.
You like silver, mate?
Yeah, look, I think. Sorry, George, you go.
No, I don't trade silver at all. So I'll listen to Jeff.
Yeah, look, I think I spoke last week about silver, and I thought it was equating to, or looking very, very similar to the sentiment cycle. And I thought we were in a phase that was a rally phase of the sentiment cycle, not the aversion point yet, but I thought we were. And can you put that chart up, George? Is that possible or no?
Silver, yeah, I can find it.
And last week's candle was a higher low on a potential reversal. So I thought that might just look interesting this week, silver. And I think probably is already triggered off that weekly bar. May not have.
Just change it, colors.
We'll be back in 1 sec.
Nope, we want candles. On the weekly, is that correct, Jeff?
Yes, mate.
Yeah, so that's a weekly there.
Yeah, to me, we're in a little bit of a buying phase. I'm not going to say it's going to reverse yet, but I do think off the top there that we're getting close to what looks to me a bit like a sentiment cycle. So bull phase may be up to, I can't see the numbers, but it's probably around about 20, 50 or something like that.
Didn't hear that, 23 or something.
Where there's a low and a high confluence area. I think we can rally up. I think it did or something like that. Can you hear me still, George?
We can, mate. It's in and out, but yeah, we can just about get you.
Yep.
About there.
Yeah, down a little bit lower, George. There's a low and a high that coincide. I can't see the exact level.
Looks there, yeah.
Somewhere around there.
Yeah.
It's about the 20.8 level.
Yeah, getting close. Yep.
20.448, a little bit lower.
Yeah. I can definitely see a rally to there.
Okay.
And maybe that's the candle. I've the entry look of it already, but a little pullback there might be handy.
Silver actually looks really interesting, doesn't it? Because it looks like
I think because the dollar is at that 119 level, which is something very hard to get through, and just settle. I've lost the dash now. I don't know. Is it just me?
I think it's just you, mate. Do you know
Sorry,
what
guys.
I like about...
I'm in a.
Don't worry, Jeff. Don't worry. We kind of got the picture. I think what we're sort of seeing there with silver as well is that triple bottom, and the fact that it has held, it looks a lot better than many other assets. So I'd agree with Jeff on silver. If you're looking for things to trade against the dollar, I would have thought this would be quite high. This would be high on my list anyway.
So and then I mean, you're taking it, you could actually go higher, right? If we break out above this level, you know,
Yeah.
we can come and try and test those levels. I don't know how long that will take.
Yeah. You know what, you
Breaking
might enjoy silver, George. It's nice and volatile. So you know for a intraday traders, it's actually quite a nice instrument to trade.
I'll have a look at it. I've never looked at it, and I'll look at it. I'll definitely look at it. Especially now, beginning of the month, I always, you know, decide which charts I'm not going to bother about and what I'm going to add on.
Yeah, yeah.
So,
Well, it'll be interesting to get your views on it next week.
Yeah.
But yeah, I'll be looking at it as well. I think because Jeff's probably struggling, we'll probably wrap it anyway here. We're only 10 minutes off, but thanks so much as always, George. And thanks to the guys that have joined us in the room. The spread is also bigger for silver. Yes, it is a bit. Only a little bit. The 4 pips, isn't it?
So just one question on silver. I know when I trade gold, I just price it the same as currencies.
Yeah.
Do you price silver the same way?
When you say price it the same way, where you measure the pip move?
Yeah. So for example, if I was trading 1% of my capital on euro, it's the same I would do on gold. I'll just use.
I see. That I don't know. I tell you what, you see, I've got. So with silver, you're trading the 2 decimal places after. You're trading the decimal place 1 and 2. So you're trading the cents. But so I suppose quite like the yen in that regard. Yen pairs.
Okay.
But I've got 2 different accounts, and one account is nice and intuitive, where it gives me a dollar per pip value, or pound per pip in my example value, which is great. Does a lot of the calculations, but on MT4, it's not quite like that. You've got to kind of do a little bit of round the houses in exchange rate. So I tend to have to sort of like drag things around a little bit and find out where the stop would be, so I could figure out what the value of the lot size is. But I tend to do it as I go with silver. So I would double check it before you're doing anything, of course, you know, to see how much a dollar costs, see how much it costs between go from 19 to 20 or something like that, or 18 to 19, and then you'll know, because that's effectively 100 pips.
Yeah. All right. No, I'll look at it. Definitely look at the charts. I'll definitely look at it.
Yeah, it'd be really interesting to get your view on it, mate, because it is very technical. You know, gold and silver do tend to be very technical charts, and it's nice and volatile. So it's really good for intraday trading. I do really like it. Thank you, mate. Anyway, and
right,
Jeff, we can
Super.
see you trying to come back in, mate, but don't worry, we will wrap it here and try again on Thursday. It doesn't look, I mean, the market looks quite, it's a bit benign today. We've seen the FTSE 100 open up and pretty much go nowhere. It's opened up and it's not really sure what direction to go in. You still have to suggest that it is going to be selling off over the course of the next week at this particular time. So whether you want to get shorts in the market at these low levels is going to be your choice. But at this stage, there's nothing to suggest that we are going long. But as I said, we should be aware that things could shift and that we are in a particularly strong period for stocks. So let the charts determine and dictate when that might happen. But I'll tell you one thing, I'll be really interested if I find a break of a trend line and the first higher low on an hourly. I'll be really interested in flipping positions on the FTSE. But as I say, that is not there yet. So things are still short for me. Thank you, buddies. Thank you, Jeff. I can see you back in, mate.
Yeah, I'm not sure if you can hear me or not. Sorry, I'm in a hotel and the internet connection is just ridiculous. So
don't worry, mate.
I will. I'll be home. I'll be home for Thursday, so we'll be back.
Fantastic.
Sorry.
No problem, mate. All right. Well, I'll do your farewells for you. We will see you on Thursday. Thank you, Jeff. Thank you, George. Thanks, gang. Thanks, Sam, for looking after us.